Prakash Padiyar is with us. He's Senior Fund Manager at Tata Asset Management. Chandraprakash, good to have you with us here. Thank you very much for your time. I was just looking at an interview you gave a couple of months back. You were talking about how you like the consumer durables space. Is that the view still? And want to just expound on that a little bit? What exactly that space?
Yeah, hi Prashant, thank you so much for having me. I think what we were saying is more about consumer discretionary and consumer durables as well, in the sense that we do see real estate doing well. The builder community or real estate developers are seeing very brisk sales every month, every quarter, every year nowadays. Demand supply is quite strong, which means that over the next 12, 24, 20, 36 months, these developers will hand over lots of inventory of real estate to the actual consumers, which in turn will lead to the fresh round of buying for household goods and home improvement areas, which obviously means the demand environment is likely to be positive. So we are looking for ideas in the consumer durables and consumer discretionary space for our portfolios. Unfortunately, or let's say the current environment is such that valuations are still on the higher side. So if you look at our portfolios, we are looking for ideas. As of now, the role that consumer durables and consumer discretionary stocks play in our portfolio is not very large. It's limited in nature. We are more looking for risk reward where it is in favor. So we are looking for fresh ideas in that space, yes. I think we have some time. We have the next 12 months to kind of pick and choose some of those businesses.
Hi, afternoon. Can you talk about some of your recent ideas? Because everything seems to have moved up. So it's hard to find stocks where the risk reward is favorable. So can you apprise us of the activity that you've done in your portfolio over the last 2 or 3 months?
So I would not say 3 months. Let's say in the last 6 months, if you would look at, let's say I managed 2 funds, Tata Small Cap Fund and Tata Large and Mid Cap Fund. And in both the funds, we have made fairly large amount of changes in the portfolio in both the funds. In small caps, we've probably churned close to 50-60% of the portfolio. In large and mid cap, we would have churned 30-40% of the portfolio. So we have been able to identify a fairly large new number of stocks for both the funds in the small cap category and in the mid cap category. See, the situation is that, as you rightly said, especially in the mid cap space, over the last 3 years, we've seen a fairly large, significant up move in stock prices, and maybe in many cases higher than what earnings delivery has been. So to some extent, valuations in the mid cap space have moved higher. And it prompted us to change the portfolio, especially in the mid-cap part of the portfolio. Within segments, as you asked, I think we've been very optimistic on capital goods, industrials, financials in the market. And these are places where we've kind of identified select businesses where we believe risk reward is in favor. The only thing that I must highlight is that we generally do not look at very near-term outlook, which is the next 6 to 12-month outlook. We are more long-term investors. We don't churn too much. At times, our churn is less than 0.3, 0.2 on an annualized basis. So which means that we are looking for the next 2-3 years. And since we have a reasonable time horizon, we think there is enough and more opportunity to choose from a risk-reward perspective. So we've been able to identify select businesses in those sectors.
Just hold on to that thought, Chandraprakash. I'm going to come back to you, but take a look at the Nifty and about market dynamics. But I'm looking at your portfolio and Radhiko Khaitan, that makes the risk. And I was just looking at the release that they put out yesterday. A bottle of whiskey they're selling for around 5 lakh rupees a bottle. Wow, talk about single malt. Talk about people wanting to move up in terms of the consumption chain. Premium alcohol, getting buyers. 400 bottles is what they want to sell. I think 398 are done. How do you approach this theme?
Yes, I think there are very smart business managers today who've been able to premiumize their portfolio and launch good brands in the market where consumers have, and these are Indian companies, by the way, these are not global MNCs which have already had historical brands and just trying to bring in the country. And I think Radico is an example where companies have been able to launch and create brands in the country over a period of time. And that's how premiumization is happening in the portfolio for them as well. So, and as you rightly mentioned, we do have some of these businesses in our portfolio where we believe managers are able to scale profitably with higher and better margins.
Nigel, I think out of the remaining two, you said 398 are done, two are remaining out of the 400. We all know who's buying the last two bottles of that Radico whiskey, right?
It's available at Hyderabad airport, by the way, but for
all the details are in.
No.
Oh, okay, I think conversation post.
We'll skip this one, Surabhi. We'll stick to the basics. You know what it is.
Okay, getting back to that conversation with Chandraprakash. Chandraprakash, so, give us a thought process now, specifically with respect to mid-caps. Like you're saying, there's been a fair amount of churn that you've also done in the portfolios. You have, representation from some consumer companies. Radico is one. I think in one of the schemes, you also have Varun Beverages. You have some engineering companies as well. There's NetWeb. So it's a whole mix. So what's the thought process with which you're approaching small caps now in terms of just the kind of ideas you're looking for?
So for us at Tata Mutual Fund, we believe in the investment philosophy of growth at reasonable price, where we are looking for businesses which can grow at a sustainable pace at a fast pace and available at reasonable valuations. And which means that our claim to fame, actually, so to say, is to identify businesses early, where at the time when we are buying, most of the market may not be looking at those businesses favorably for some short-term reasons. Since we have the capacity and ability to buy and hold for a long period of time, we can ignore the short-term volatility and buy for the long term. And that is the reason why our stock, our buying or our bottom-up stock picking approach has helped our portfolios over a long period of time. So when I mentioned that we have over the last 3-6 months, we've churned some part of the portfolio, both in small cap and large and mid cap. We have actually bought businesses where market is probably mispricing, in our opinion, some of those businesses, let's say in the CDMO pharmaceutical space or in the CDMO agrochemical space as well, and in asset management companies as well, or in financials, or in some in capital goods. So these are places where we've been able to identify good stocks or good businesses which are run by capable management teams, and where we believe these companies can scale at a very fast pace and surprise the market positively on earnings. I think what is going to be important, especially in the next 6 to 12 months, is that we are going to see increasingly more divergence in companies' performance delivery. Not all companies, not all sectors will be able to deliver what market expects. So there is going to be, so for example, what has happened in the last 3 years is companies, business after business, sectors after sectors, have outperformed expectations consistently for 2 to 3 years back to back. And that is why in our market, we've seen a very sharp re-rating across the board. Incrementally over the next 6 to 12 months, our view at least is that you will see more divergence. You will see very selectively businesses outperforming expectations, which means that valuations incrementally going forward needs to be taken with a pinch of salt, meaning that you need to be very selective in what you buy. And lastly, our view is that incremental returns or return expectation needs to be on the lower side, I think, given the re-rating that we've seen especially in the last 6 to 9 months.
Got it. So trying to buy businesses which you think are being mispriced by the market. Now, I picked up on two, and maybe that'll be a conversation for the next time. You said pharmaceuticals and, interestingly, agrochemicals. Very interesting, because I think chemicals as a space hasn't done anything. It's been down in the darkness. So perhaps next time we'll ask you more about that call as well. But thank you so much. Good to have you on the show this afternoon. Looking forward to the next conversation. Well, with